Well, hello everybody, and welcome. This is Vic Noble. I'm the personal coach at Forex Mentor, and for those that don't know me, and this week we're going to have a look at another example of. I just want to show you another top-down analysis, and I think repetition is really, really good on these things, just to continually show how you want to use all of these time frames to develop a trade, a nice trading plan. And we've had quite a week this week actually, with the U.S. dollar actually starting to show some real life, and so we'll see how that pans out. But this was on the 22nd. On the 21st, we had this rejection up at the 2.00 area on the British pound, and then the next day it rallied back up to this area again. The question is this going to hold? Are we going to break through? What's going to happen? You want to start to look at your lower time frames. If you go down to the 4-hour chart at that point, you can see what had happened here. We'd had this rally, a nice rally in price, followed by more rejection up here at the 2 area. You see that? Now, the other thing that I think it's really useful to keep an eye on is pivots. And on these higher time frames, look out for the monthly pivots and the weekly pivots. See where they're at. This is the central pivot for the month. See, we rallied up. Look how we hit the M2 pivot. Pretty darn nice, right? See, it was back at these old highs that used to be resistance, became support, rallies up, hits the monthly central pivot, and stops. Do you know that this week, let's take this off for a minute, and we'll put the weekly pivots on now. Watch this. The weekly pivots, this was actually the M2 pivot, and amazing how they matched up this week. Rallies up, strong rally right to the weekly M3 pivot, which is what? This is in the sell zone, right? So just a clue to watch out. Hey, we could be getting a nice move down here. Okay? Now, go down to the 1-hour chart. On the hourly chart, what do we got? Well, boy, let's just don't forget our old friend market flow. It's heading down. We've gone below the swing low here. You see that? Quite strongly. And this is looking pretty negative. Big, huge railroad tracks, whatever you want to call it, dark cloud cover, it's that kind of a thing. Actually, it's an outside candle. The range of this candle goes higher than the prior candle and lower than the prior candle, red candle. So it just look at all of these little hesitations, and then down she goes. You want to think about selling a rally here. Okay, lots and lots of clues. We had some negative divergence to price going higher, MACD going lower at the same time. So big drop in price. So you want to look at selling these rallies up in here. If you go down to the 15-minute chart now to really zero in on a trade, boy, was it ever good. Do you know that on this 15-minute chart, in fact, I'll show you something. The M3 pivot that day, which is where? That's in the sell zone. look where it came to. On this day, the M3 pivot was right up here at 99.71, 199.71. Okay, that's an excellent place to look to sell, because we've already had rejection here. See all of this? This is an area of resistance. We know that already. The price has already shown us that. It was also a Fibonacci number. It was also there was other factors in here that made this a very, very good trade, and not to mention that the higher time frames were all pointing to the possibility of a sell. The risk in this trade, and I go over that quite thoroughly where to put your stops. It's like less than 40 pips. Okay, which is fantastically good when you consider that the profit potential, which I have very specific places to show you where to take profits, 135 pips at our first profit target, and 180 pips at the second. All that for a less than 40 pip risk. That's a good trade. Okay, so as you can see what happened, price rallied up hard. Now the MPC minutes were coming out. The Monetary Policy Committee of the UK were coming out showing how they voted for the interest rate decision last time, and of course they were in favor of a cut. That's going to be more negative for the British pound US dollar. I mean, fundamentally, we've got the retail sales had slumped, and coupled with the fact that the US is starting to show some life, it's pretty reasonable to expect that this is going to have some rejection. This had to move up over 100 pips to get you filled here, and at that point, and I'll show you specifically how to get into the trade at this level as well. All that with just a very small risk. So look at how price reacted off of that level. I mean, it was quite amazing, and down it went. Our first target was down at 98.35. I'll just put a line across there, 35 was right around here. And our second profit was down at 97.90, right there. Okay, so let's just have a look and see how price just dropped very, very quickly down here. That's a nice day of trading. That's a nice month of trading. Okay, so you don't need to do very much of this. And I want to show you, you think these levels are good to take profits at? Boy, oh boy, I tell you something. One thing about trading, if you don't know where you're going to get out of a trade, you're going to have a problem. You're going to have fear, you're going to have greed, you're going to have all sorts of bad emotions going on that will not help your trading. So it's important that you really understand not only where to get into a trade, but how to get out of it and how to move your stop down and manage the trade once you're in it. It's very, very important. Okay. Alrighty, well, that's just wanted to point that out. I know it's just another top-down analysis, but you know, if this is really key to learn how to read the markets from the top down, because otherwise you're just not going to know the proper direction to trade that's going to give you the best chance to make money. Hey, it's not perfect 100%, nothing is, but this is works very, very well. So let me know if I can help you with it. You know where to contact me. You guys have a great weekend, and I will be back next week with another trade example for you. And this is for the week ending April 25th, 2008.